Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the confusing world of finance and corporate filings. And let me tell you, our report today is going to be a real page turner, almost like a financial thriller. Today we're diving deep into Nuveen Global High Income Fund's latest N2 filing and update on their ongoing efforts to raise funds. This document gives us a peek into how they're planning to offer shares and what they've been up to in the market. So Nuveen Global High Income Fund, or JGH as it's known on the New York Stock Exchange, is a big player in the closed-end fund game. They're looking to raise up to $100 million by selling common shares, preferred shares, or even rights to buy common shares. Think of it as them offering different packages of ownership to investors. Now let's talk numbers. On a recent day, August 8th, their common shares closed at $13.34. But here's something interesting. The actual value per share, called net asset value or NAV, was a bit higher at $13.90. This difference between the market price and the NAV is something called a premium or a discount. For JGH on that particular day, the price was actually a bit lower than its EV, meaning shares were trading cheaper than what the underlying assets were worth. This discount can sometimes signal that investors are a little less enthusiastic about the fund's prospects, or perhaps the market is just being shy. As of August 8th, they had over 23 million shares out there with a total net asset value of about $322 million. This tells us the sheer scale of their operation. Now, a key strategy for this fund is something called leverage. Basically, they borrow money to invest more than they have. This can be a double-edged sword. If their investments do well, leverage can really boost returns. But if investments falter, leverage can magnify losses. They get this leverage through things like borrowings and reverse repurchase agreements, which are like short-term loans backed by their securities. And this leverage comes at a cost, as you can see in their expenses. Interest and related expenses alone were about 2.41% of their net assets. That's a significant chunk just to pay for borrowed money, especially when you couple it with their management fees. When you add up all their annual expenses, including management fees and other costs, it comes out to 3.73% of their net assets. That's pretty high. For perspective, if you think about a 5% annual return, over 3% of that is just going to cover the cost of running the fund. It makes you wonder how much is left for the investor. Let's check their returns based on the net asset value. JGH had a solid return of over 13% in 2024. That's pretty good, especially considering the costs. And if we look at the return based on the share price, it was even higher at over 15% in 2024. This indicates that the market price of JGH shares actually grew faster than their underlying asset value that year, potentially closing some of that discount we saw earlier. However, those high expenses are a recurring theme. In 2022, their expenses were about 2.43% of net assets, and in 2023, they were even higher at 3.82%. So while the returns have been good, the cost to achieve those returns is substantial. They also have a pretty high portfolio turnover rate, 93% in 2024. This means they're frequently buying and selling assets within the fund. While that can be a strategy to capitalize on market opportunities, it also means higher transaction costs, which, while not explicitly listed in the annual expenses, do eat into overall returns. This filing confirms they are a registered closed-end fund and are operating under a specific accounting rule that allows them to register securities this way. The brain behind the operation is Nuveen Fund Advisors, LLC, supported by Nuveen Asset Management, LLC as the sub-advisor. They are the ones making the investment decisions, managing the day-to-day. And yes, they benefit from those management fees, which we've already noted are quite high. It's worth noting that their management fee is a percentage of managed assets, which include those leveraged assets. This creates an incentive for them to use leverage because more assets under management mean more fees for them, even if it increases risk for investors. This is a classic conflict of interest they've disclosed. Looking at who holds the most shares, a couple of big players stand out: McGowan Group Asset Management and First Trust Portfolios. This gives us an idea of the major stakeholders in the fund. They have a board of trustees, and importantly, they have a good number of independent trustees, which is a positive sign for investor oversight. These independent members are there to look out for shareholder interests, and they seem to have a lot of experience from various financial and business backgrounds. It's quite common in the fund world for trustees to oversee a large number of funds within a complex. For example, most of the trustees here oversee 216 different Nuveen funds. This broad oversight can bring expertise, but also raises questions about the depth of focus on any single fund. When it comes to their own money on the line, most of the independent trustees have invested over $10 in the fund complex, which is a good sign of confidence in their own management. Remember, the fund's main goal is to provide a high level of current income. This usually means they invest in assets that pay out regularly, like bonds or dividend-paying stocks, but sometimes these can come with higher risks. Of course, with any investment, there are risks. They've incorporated by reference a whole section on risks from their annual report. This includes market risks, interest rate risks, and the specific risks associated with their investment strategies, like using leverage, which we've already discussed, and their investments in potentially less stable credit markets. Now, for those of you really interested in the nitty-gritty of taxes, this filing goes into detail about how the fund is taxed as a regulated investment company, or RAIS. They aim to distribute most of their income and gains to shareholders to avoid paying corporate taxes. Any income they distribute is generally taxable to you, the shareholder, as ordinary income or capital gains, depending on the source. They also mention backup withholding, which is basically a tax authority's way of making sure they collect what's owed if you don't provide them with your correct tax information. It's a penalty for not keeping your tax affairs in order, and it's currently set at 24%. So what's the story here? Nuveen Global High Income Fund is actively managing its portfolio and looking to raise more capital. They've shown decent returns, but the high expense ratio and the inherent risks of leverage and high yield investing mean investors need to be very aware of what they're signing up for. It's a fund that aims for income, and that often comes with a trade-off in terms of risk and cost. That's our deep dive into the Nuveen Global High Income Fund's filing. What do you think about their strategy and those hefty expenses? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more insights into the financial world. And don't forget to join our Discord community, linked in the description, to keep the conversation going. Thanks for watching, and we'll see you in the next one.